mean, this is the highest iron ore price since 2011. The risk to us, in my mind, is very much skewed to the downside. $180 a tonne. The Brazilians are strongly incentivized to do whatever they can to get production up and take advantage of these current prices. The upcoming dividend for Rio is likely to be very healthy. I think something that's a bit different this time is that neither Rio or BHP have made very, very poor acquisitions at the top of the cycle. Looking at other previous booms in the iron ore price, 2001, 2006, they all made very big acquisitions. This time around, the shareholders haven't had to contend with an Alcan acquisition or a Mozambique coal. So consequently, sort of the cash flow looks a little bit better than it has in previous. But in our minds, there's very little margin of safety at Rio trading close to sort of all-time highs. There's a couple of bucks off its all-time high, and probably the next leg being sort of downward here from the iron ore price.
See, that's the thing as well. We keep talking about this looming downtrend, I suppose, in the iron ore price, but it just keeps bucking the trend. And then you look at, for example, some of perhaps the other risks that Rio Tinto might face. Do you think that, say, for example, the likes of Oyu Tolgoi, the likes of the regulatory risk, do you think that knocks anything off the share price, or is this purely just iron ore related?
I mean, the investors, whilst this had a very tumultuous year, in the last sort of 12 months, Rio Tinto have lost their CEO, the head of iron ore, head of communications, and the chairman announced a couple of days ago that he's retiring at the end of 22, all around the Junction Gorge, that detonation. So that's a big issue that they have to sort of overcome. But from investors, whilst sort of they look a bit at the ESG, all the eyes are really on sort of iron ore, both the price and the sort of continued production. And looking much more closely, look at Vale. If Vale starts to significantly lift up the production, the Chinese can't be happy with the $180 a tonne iron ore price. Unlike some of the other Australian commodities such as lobster or red wine, they have very few alternatives. So I think the Chinese steel merchants would very much like, and also the government would very much like to see the price being much lower than it currently is. So there's a bit going on there. You also mentioned Oyu Tolgoi. Looking at that, the production was a little bit lower than expected. We saw the Mongolian border being closed and ongoing squabbles between Turquoise Hill and the Mongolian government. Doesn't help sort of sentiment there, but hopefully they'll look to be ironed out, because that's Rio's most important growth project.